Exactly these two trades and also the current trade that we have open right now, we found together in our live stream based on my fair value gap trading strategy. And this isn't just some theory I'm telling you here, but I've been doing this for over 8 years now to find my trade entries in the crypto market. Exactly how the strategy works and above all, what you need to watch out for, we're going to go through in detail in today's video. So definitely make sure that you absolutely watch this video until the very end, and please feel free to leave a like right away as the first thing you do. If you're new to the channel, a warm welcome here to the community. Here you get everything about trading every single day, not just in the crypto market, but also in gold trading, all the information you really need. We're also live here every day at 6 p.m., going through the markets together, making sure we open a few positions as well. And exactly that position is the one we opened today, together in the live stream. And right here in today's video, I also want to show you how I found this entry, and above all, what you need to watch out for when you trade using this strategy. Because most people just mark some kind of fair value gap, blindly enter the market, and then wonder why they either get stopped out or why the trade position doesn't even move into profit. That's why fair value gap, very importantly, is not a single entry point. Fair value gap is a zone, which we're obviously going to take a close look at now. And I also want to give you a little hack here on how you can find fair value gap zones automatically right in the chart without having to put in much effort or having to search wildly through the whole chart in every single candle. So let's not waste any time and start right here with the strategy. First of all, very, very importantly, let's briefly clarify what is a fair value gap anyway, so that you're exactly up to date on that. If you want to learn trading, I have something perfect for you, namely a completely free trading bootcamp. To do that, just click the link in the video description. You'll get to our Discord community, just accept the invitation, and then you'll come directly right here into our Discord server. Very important, confirm briefly here. That means unlock access, then press verify once, and then you'll come right here into our area. You don't just have, on the one hand, the possibility, of course, to take my trade positions, to get gold signals, but of course, also even more importantly for you, what you must have and what you definitely need to master trading properly, the complete free trading bootcamp. So feel free to check that out. If you really want to learn trading, it's perfect. The next place for you to go. There in the bootcamp, you'll learn everything you need. Let's come, of course, first to the most important question that we need to clarify beforehand, before we go into the strategy and into the live application. What is a fair value gap anyway? And above all, how do you find the fair value gap correctly? A fair value gap is nothing other than an area in the chart where the price has moved very quickly in one direction. That means because of that, no clean trades can be found. It has a gap in the chart, so to speak, and this area would be skipped, as it were. We have fair value gaps, on the one hand, bullish fair value gaps, or also bearish fair value gaps. In that case, we always need three candles that we look at in the chart. That means we have a normal candle, we have a very strong candle, meaning an extremely large movement, either a bearish movement or a bullish movement, and a trend continuation, which means a third candle that continues the movement and doesn't initiate the counter movement. What's important here is that we look at, okay, what happens between the wick of candle 1 and the wick of candle 2? And exactly this gap is a fair value gap. And you then draw this gap in the fair value gaps into the chart accordingly. The next question we have, of course, is why do these gaps occur? And above all, why are fair value gaps also so interesting and important in chart analysis? Generally, it's that this smart money concept, maybe you've heard of it somewhere, that large institutions also trade exactly based on that. So why do these gaps or these fair value gaps occur? Because the market makes a movement very, very quickly. That means when big buyers come in, for example, large institutions, news movements come in, for example, CPI data or any other economic data that comes in, or suddenly a lot of volume is active in the market, which is then used, for example, through liquidation zones or various stop hunts. That means the result, the price closes very, very high or even below the candles so that there is no counter order. And that is the market, or because of that, the market is in so-called inequality, meaning this imbalance zone, fair value gap, is then formed accordingly. Why are these fair value gap zones so interesting for us as traders now? Because the markets or the market makers like exactly a balance between buyers and sellers. That means they want to close these areas again. meaning the price comes, it's not a question of if it comes back, but actually always a question of when it comes back into these fair value gap zones again. That means to close this gap accordingly, of course. That's called something like closing the imbalance or, of course, filling the fair value gap. And we can take advantage of exactly this filling of the fair value gap. And we as traders can use this filling or this picking up of the fair value gap zone perfectly for our next trade entry. And that's exactly how I found my last two trade positions and also the current trade I have open here. It's even slightly in profit in our live session. Now, of course, the biggest question of all, how do you find such fair value gap zones in the chart? There are two options you have. Option number one, the slightly more difficult variant, is of course to take a look at the chart. Fair value gap zones exist in different time frames. They exist in the 1-minute chart, the 5-minute chart, the 15-minute chart, the 30-minute chart, the 1-hour chart, or of course in the 4-hour chart if you use it for swing trades or day trades. My personal recommendation for implementing my strategy is to use the 1-hour chart and the 4-hour chart, because especially for day trades or swing trades, it's the perfect time frame to find wonderful entries. So how do we find the entries exactly? To do this, let's first take an empty Bitcoin chart here. Very important to say, it also works with any other coin, with any other position you can open. This means that for people who trade gold, it's also possible to trade based on fair value gaps. So let's take a look at a movement now. We're here on the 1-hour Bitcoin chart looking for specific candles that show a significant movement. And I immediately noticed two different candles. Candle number one, candle number two. And we'll also take a look at, or rather, here are two more giant candles that already suggest a fair value gap. So that means we need three candles. We have candle one, we have the impulsive move, candle two, and we have candle three as a trend setting continuation. This means the fair value gap zone we have was created right in the middle of that center candle. So we mark that in and then we trade the pullback into this fair value gap zone. And that is then our entry point. But now I want to give you a second option, how you can make it even easier to automatically draw fair value gap zones into your chart without having to guess or needing massive trading experience. And for that, you need nothing more than our TradingView indicator, which automatically shows you exactly where the fair value gap zones are. And you can see right now, I had also drawn a fair value gap zone in exactly this box. And here, voila, a fair value gap was also created right in this box. So how do you get the indicator? It's quite simple. First link in the video description. That will take you directly to our Discord channel. Once in the Discord channel, click on Unlock the VIP area, click on Create Ticket, and then it will explain exactly what you need to do. We also have a small step-by-step guide for you here, so you know exactly what to do. So create a ticket, then briefly write your user ID here so we can link you up perfectly. Then the VIP area will be unlocked for you, and under indicator updates, you'll find 3 different indicators we offer. For our trading strategy with fair value gap zones, you need the first indicator, Smart Market Zone. Click directly on the link here. There's also an explainer video where I show you exactly how the fair value gap zones work, how the strategy works, and especially how the indicator works. You're welcome to watch that, or you can get a PDF summary. Then you go to this next section and click on Use on Chart, or you can also save it directly as a favorite. And then you'll have the indicator right up here. Crypto Training 2.0, that's the indicator. You can, of course, make some adjustments in this indicator. To be honest, you don't really need to change anything. Now, I left everything at the default settings. If you want to change something, you can, of course, do that at any time. And then these green and red zones will be automatically drawn, which are exactly those fair value gap zones. I'm intentionally turning off the EMAs here for now. So I'll just go over here, click on Style, and then I'll turn off the EMAs. Since the EMAs aren't relevant for us in this strategy right now because we're trading based on the fair value gap zones. As I said, this strategy works in any time frame, like the 4-hour chart, and you can see the indicator adjusts automatically. And you don't have to go back into the chart and draw things in every time frame until your chart looks like, well, I think you know what I mean, because the indicator draws it in automatically, no matter what time frame you're in. And that's what makes this indicator so powerful. Because if I go back, if you don't have the indicator active, for example, then your chart looks like this. Exactly, you see nothing. And that's exactly what this indicator does. And with this indicator, we're trying to find our perfect trade entries, of course. It's also important to understand that before we start the strategy, we need an exchange where you can actually place your trades. I do all of my crypto trades on the 2-bit exchange. It has the huge advantage that if you use the link in our video description, you automatically get VIP trading level number 3. VIP trading level number 3 means that instead of 0.02% in fees, you pay 0.012% or 0.0375 taker fees, whereas as a regular user or on other exchanges, you'd pay 0.06%. 2-bit is really strong when it comes to fees. You see, trading level VIP 3 might not sound exciting at first because VIP level 3 isn't as high as on other exchanges. But just look at the fees. As I said, that's 0.012% in futures maker fees. Just for comparison, on the BingX exchange, you'd need at least VIP level 4, or on LevX, you'd even need to have VIP level 13. So you can see how strong the 2-bit exchange is here with its futures fees. Plus, you even get a 20% lifetime discount from me. That comes out of my own commissions and goes back to you, the community. So definitely feel free to check that out and look in the video description to get your VIP level right away so you can benefit from those low fees too. That's a fee saving of over 30% that you're getting here. So please be sure to check it out. You can find the link in the video description. You can also pick up a deposit bonus or 2 on top of that. That means all the information is in the video description. First things first, go ahead and create an account. Then go up here to perpetual trading and click on Bitcoin because we're mainly trading Bitcoin here, of course. But it's very important to say that these fair value gap zones also work for any other coin, whether it's Ethereum or Solana, and of course for gold or even the traditional Nasdaq market, where you can also take positions. So how do we set our entry zones? I already mentioned this at the very beginning. Fair value gaps are zones, meaning they aren't direct entries, but zones we look at to see where the next interesting areas for us will be. I'll go ahead and use this example here of this last opportunity, and I'll just clear the chart for a moment to do that. So now you can see we've formed a fair value gap zone here. That means we didn't just run into a fair value gap zone, but we also formed a second one right above us. I really like trading my strategy on the 4-hour chart, especially for day trades or swing trades, because the risk to reward ratio is simply the highest there. So once we found a fair value gap zone, which is currently the case here, from $70,100 down to $69,000. That's our fair value gap zone, and we'll enter this trade position within this fair value gap zone. Now, you have 2 options. I'll explain which option I personally use. In general, you could also say, okay, I'll do my own entry entirely. I'll go down to the 5-minute chart again and look at the small time frame to enter a position there. I do it a bit differently. I enter with a first position right at the start of the fair value gap zone, and in the second to last area, like in the last third of the fair value gap zone, I enter the market with a second position. This means I split my position, 50% of the order in the first variant and 50% in the second entry. I always set the stop loss above the last high or always in the last area of the fair value gap. That means if you were to enter in the middle, for example, which would then be exactly your entry if the position is picked up at the top, then the stop loss is either above the fair value gap zone or above the last high. It depends a bit on which market phase we're in and of course what the chart structure looks like. If the high were up at $74,000, for example, then the risk to reward ratio wouldn't work. That means we'd have to look at a smaller time frame to see if we should set the stop loss above the last high. In this case, I'd set the stop loss above the last high. For take profit, we have 2 take profits that we take. Take profit 1 is always a risk to reward ratio of 1. That's always TP1. We work with TP1 and TP2. Theoretically, you could, of course, let the position run further because this is naturally a day trade position. And in terms of take profit, that's the level from the last low or the next fair value gap. So you see here, there's no fair value gap below us for now. That means I wouldn't set a take profit down there, but rather at the last low. So let's repeat that. TP1, risk to reward ratio of 1, that's where we take partial profits. That would be the case here. We'll take partial profits there. As soon as TP1 is reached, we move the stop loss to the entry price, so you have a risk-free position. And then TP2 continues to the last low, or in a long position, it would be the last high or the next fair value gap. So we're in the positions now. We'll let the position run for a bit. And of course, we'll take a look at the whole thing. Let's watch it. Boom, we've been picked up. As you can see, the trade entry was perfectly hit. Entry 1 was picked up and entry 2 was picked up. We set our take profit 1 at a risk to reward ratio of 1. That means TP1 was reached perfectly here. We moved our stop loss to the entry price. As you can see, the fair value gap zone is still active. It wasn't completely filled, and the trade position or setup remains active until the fair value gap is fully filled. Meaning if we had a pullback into the fair value gap zone, we would enter a new trade position again. Either because you got out at break even, for example, or maybe even took the next entry. So let's let it run. Boom. As you see, the fair value gap zone is still active, still active, still active. You might have even, boom. There we reached TP2, and that's where you would have exited the position. So we had TP1 once and we got TP2. Now let's let it keep running. So the market is coming back. Boom, the market is coming back. Same scenario. New trade position. Now, hopefully you listened closely. Trade position also just like entry 1, entry 2. That means we've opened a new position here again. Stop loss above the last high. That's still the last high where we already took a trade before. Then TP1, as you correctly identified, is our risk to reward ratio of 1. That is our take profit number 1. Take profit number 2 would be the last low. So for example, we have another next move downwards here. That would be the last low right here in this last wick. As a little tip, I'll tell you to always take partial profits on the way down. Simply to capture the movement, of course. We've let it run a bit further now. As you can see, TP1 was reached perfectly. That means our stop loss is set back to the entry price. We let the trade continue and it wasn't reached. Boom, and we were stopped out. So in this case, we didn't lose any money because TP1 had already been reached. And that's why it's so important that at TP1, you always set your stop loss to the entry price. And also take some profits at TP1. For example, you could have also taken partial profits on the way down. You see, we got a third run into the fair value gap zone. That means we would have had a third trade position. Likewise, trade position 1 and trade position 2 were both picked up again. Stop loss above the last high as well. Trade position 1, so TP1, would again be a risk to reward ratio of 1. Take profit 2, last low, or watch out, the last fair value gap zone. We've formed a new fair value gap zone. That means TP goes into the next fair value gap zone. Now we have a risk to reward ratio of 3. In general, definitely make sure that if you take this trade, you only take every trade if you have the possibility of a risk to reward ratio of over 3, because we are currently doing swing trading here. And in that case, it makes sense to also go with a risk to reward ratio of 3. So let's let the chart run a bit further. Boom, as you can see, we reached TP1, TP1 was reached, we moved the stop loss to the entry price, and then we ran back to the entry price once more. The position was stopped out, fortunately for us, at break even on the entry price, so we didn't lose anything. We've now got a new fair value gap zone, so that means we might have a new entry for a long position here. And above us, there's also another fair value gap zone where we could potentially enter a new short position. Let's let the chart keep running. Boom, we've got a new trade position. The start of the trade position, for example, would have been here, where we would have entered right at the beginning of the zone. And at the end of the zone, with the stop loss below the last low would have been the case here. That means we'll also enter a long position there. So we have a long position here now. Stop loss, last low. TP1 would be a risk to reward ratio of 1, as we said. That would be there. TP2 would be the fair value gap zone. Let's let it run further. Boom, the position was stopped out because we had the stop loss below the last low. If we had moved the stop loss a bit further, the position would have worked out, but then the risk to reward ratio wouldn't have been met. So we had a trade there that hit the stop loss. Before that, we had 1, 2, 3 trades in profit and 1 trade hit the stop loss. That means the risk to reward ratio is definitely the most important thing there. Of course, you can argue about this. I just said that we only take trades that have a risk to reward ratio of over 3. So you could have said you wouldn't take this trade, but even if you had taken it, you would have hit a stop loss here, but you took profit 3 times. That means you are definitely on the winning side in terms of risk to reward ratio. Let's let the chart keep running to see if we get a new position with our fair value gap zone still active way up above us. Let's wait and see. Boom, got a new trade position in the fair value gap. So that means a new short position in the fair value gap zone. As I said, entry 1, entry 2, then a stop loss above the last high. Now we have to look closely. The last high would actually be as follows. It would be up here. The next target would be the low, or the next fair value gap zone would be down there. That means we have a risk to reward ratio of 2. It's okay. You could say you'd set the stop loss a bit lower. That's something I'd say you can consider. How that fits from a risk perspective. In this case, I would have set the stop loss a bit lower, maybe to the last high of the previous movement. Then we would have a risk reward ratio of 4.6. That is definitely absolutely fine. Let's let it run. So the position was picked up as mentioned. Stop loss moved to the entry price after we reached the 1-to-1 risk reward ratio. That means we've reached it here. You could definitely take out more profits then. Let's see what happens with the market. It moved up again. It's running a bit further. It didn't hit the fair value gap zone. If you'd set your take profit at the last low, you would have hit it perfectly. But this would just be a swing position that you would have simply let continue to run. You got a perfect entry and would let the position run until it's either stopped out or potentially hits your take profit. Meaning you'd either have closed this position nicely in profit or you're still letting it run. As you can see, super simple, super easy how the strategy works in detail. My tip for you, get into chart analysis. Make sure to do some back testing. That means take a clean Bitcoin chart, a clean Ethereum chart. Draw in the fair value gap zones, or with our indicator, you have the fair value gap zone already in there automatically. Start implementing your first trades. As mentioned, you get VIP trading level number 3 here at 2bit completely for free from us. You can really save a significant amount on fees there. So definitely go ahead and check that out. The link for that, not just for the indicator, but also for 2bit is in the video description. Otherwise, I hope you have fun implementing this trading strategy. If you have any questions, let me know in the comments or feel free to join our Discord. Don't forget to subscribe to the channel as well. Feel free to leave a like right at the end of the video. We are live here on YouTube every day, going through the markets together, looking to open some nice trade positions here and there. And then I'd say we'll see each other in the next live stream at the latest.